right, we'll keep it short and sweet. I was also on with Katie yesterday. I love talking to Katie. You know what it is I mentioned it when I was on with Katie. Not, you know, a lot of times on these webinars, and I'm not saying you're all young. I know a lot of you are my age or older, whatever it may be. But I know Katie has been in the game for a long time, and it seems like we always reminisce, Yeah. And then, it's funny, he tried to drag me. You see how he tried to sneak that in? He's like, oh yeah, and remember the 87 crash? I was like, whoa, 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 whoa. Relax yourself now, okay? 87 crash. I was still a kiddo. He's trying to yank me in there, right? Trying to yank me into your class. But all kidding aside, I like talking to Katie because and he's got a great memory. He was on the floor, so he's got a lot of experience. And it's just a different game. But it's nice to talk about, especially these bearish cycles. You don't see them often. The market's more bullish than bearish over time. And the few times that, through experience, and that just comes with age and spending time in the game, you go through some things, you learn some things, and it's good to talk about it with others who have been through the same shit. So, but anyway, I was saying that, a lot of the stuff I'm going to touch on today, we spoke a little bit about yesterday with Katie, and just, at the end of the year, put a bow on it. Let's get ready for the new year. Who the hell knows what's in store? You know what I mean? We all have an idea of what are the risks at play and scenarios at play. All it takes is one thing to come out of left field and throw everything for a loop. What's that famous Tyson line? Everybody's got a plan until they catch a right hook in the face, right? Something like that. What's that? That's a great Tyson line, right? Everybody thinks they have a plan until they catch that haymaker right in the head. But anyway, we'll talk about the things especially if you guys are members. We even touched on it the weekly webinar last week that was open to everybody. The things out there, we're kind of looking for things to set up in a nice way on the positioning side, ultimately to lead to another bear market rally. Okay, because again, to rewind, if you remember what we spoke about last week on this webinar, right? We want to try, it's easier said than done, always is. So I don't want to give you guys, anybody the wrong impression in thinking it's easy. But what we want to try to do while we still acknowledge that we are under that bear market hood, right? And we're not seeing any signs of a new bull market starting to ignite. What we want to try to do is get involved on the long side anyway, right? And I know most of us are primarily long side traders. I know, a few of you out there, a chunk of you out there are bisexual. Regardless, I talk mostly on the long side and a little bit on the short side here and there. But on the long side, we kind of want to get in the middle, right, and get involved. Ooh, let me move this. Bisexual, and get involved in this, right, in whatever way. So in other words, if you want to be aggressive and anticipate a move, right, because that's where you're going to get paid, but obviously there's a lot more risk that comes with it. You want to start. We want to start looking for an entry in that neck of the woods, right? If you're playing with, which is considered conservative in the bear market, extremely tactical, and you're looking to just actively trade your way through this bear market, right? This is where we want to get most aggressive on the long side of trades. That's where we're going to see the more aggressive call sweeper activity, even though maybe short duration strikes and spec action, whatever it may be. But we're going to see the majority of the momentum to the upside, right? All comes here. I mean, that's obvious. Okay, so that's where we want That's what we want to try to stick to in the bear market until, because this doesn't last forever, until something cracks, something breaks, right? And that's usually what it leads to. You get, we talk about this all the time. You get the Fed breaking something, a credit event. We spoke about yesterday. For me, this feels exactly, and I know I've been saying it for a while, but the more we're in this bear cycle, the more it feels like that post 2000 washout, right? It doesn't feel 2008ish. You know what I mean? It feels extremely, eerily similar to post 2000. All right. And this is kind of what happened, almost to a T, what happened after the bubble popped in March of 2000. You had this downtrend where, market would see multiple weeks of weakness, get everybody riled up thinking a crash was coming, bear market rally. Did it again, bear market rally, right? And then eventually what happened was a lot of those internet names, the NASDAQ spec names, NASDAQ tech and growth names, kind of what we're seeing right now, right? Would underperform even in the bear market rallies, right? They would fail to participate. And what you eventually noticed after we were in that post 2000 bear market was you started to see exactly what we're seeing now. A lot of names and sectors looking a lot different than the stuff that's getting beat over the head. NASDAQ, tech, right? Back then it was internet, chip makers, that sort of thing. So that was all fine and dandy, all right? It buried a lot of people. It buried everybody who was trying to, buy the dip and thinking that NASDAQ stocks can't go any lower. I'm talking blue chip names. I'm not talking Kathy names. Post 2000, you had the Ciscos, the WorldComs, the Yahoos, the AOLs, you name it, blue chip of blue chip NASDAQ names that just continued to underperform the market, right? And you had a lot of people trying to buy the dip thinking they were finding value in these names. All they needed was time on their side, even if they were early. And you guys know how that story ended. They got buried. But the point I was trying to make here is after we've seen this play out, and interestingly enough, we're going into a new year now. And it was kind of, again, it doesn't line up time-wise exactly, but it was kind of going into 2001. A lot of people thought this was just going to continue, right? Because we're so used to that pattern. That's what the market gets you seeing and believing one thing over and over and over again, and then boom, right? Something comes out of nowhere. So we were talking about yesterday on Katie's show that a lot of people back in 2000 were expecting the continuation of a very orderly bear market with NASDAQ and tech underperforming. VIX, you heard the same things you were hearing now. VIX was broken, right? Anybody who tried to hedge with volatility lost more money. Puts were awful protection because, again, the market never got out of hand to the downside. If you're holding put protection, these bear market rallies, they wipe you out on the put side. So it would just add on to your losses. And you had a lot of frustration. You know what I mean? You had a lot of frustration for even people who were doing the right thing and thinking like, all right, I'm hedged here, right? I own some VIX calls, I own some puts. If the market blows up, I'm going to be fine. And worst case scenario, they didn't get that blow up. It was very orderly and it cost them even more money. So it got to the point where a lot of people just stopped hedging, right? They stopped hedging because it was considered a waste of money. Okay. They stopped even looking at VIX, right? And trying to utilize volatility as any sort of insurance and protection. And that was all fine and dandy, right? Because that pattern continued for a bit longer until something unforeseen happened, right? And again, it's one of those exogenous events that seem to happen, when we're in a bearish mood, it seems to be, right? Another thing we were talking about yesterday, right? It comes in cycles. Everything's bearish, everything's bullish. But you guys know it, even if you weren't around trading through it, 9/11, right? Two planes, what was it, two planes? I think it was two planes. Two planes or whatever, planes go into the World Trade Center, right? Next thing you know, everything is on high alert. We're all watching to see what else gets blown up, okay? The New York Stock Exchange closes down. You couldn't even get to work if you traded on the floor for weeks after that. It was only open to certain people, even when they opened it. VIX had a nice pop, and it was almost like it was the start of some capitulation, right? Even though it wasn't the one big bang that wiped out everybody and ultimately nailed the bottom, it was the start of capitulation, because what we started to see after that was a lot of just lack of participation. People were just, they lost interest, right? Trying to find a bottom in a market that's been going down for a year and a half straight, and now you got to deal with this terrorist 9/11 shit, right? Like, people just had enough. And that's when what we've been talking about for a couple months now really started to take form. And I'm talking about that bull market under the hood, right? Where it started with small caps. It was primarily in small caps. And you started to see some real divergence between the indexes, the NASDAQ names, and actually some solid small cap growth in value names really outperformed, okay? So even though it didn't technically nail the lows, that 9/11 event, the market changed after that. The price action under the hood significantly changed after that, okay? And it's going to be interesting as almost very similar setup, right? Think about where we are here. Very orderly decline, right? VIX is dead, right? You already hear it. VIX is broken. Nobody wants to pay attention to it. No one wants to even try to utilize it as insurance, okay? If you have puts, you're losing money. Same exact type of setup as we go into next year, okay? And yeah, I'm not Nostradamus. I don't know what the hell is going to happen. Almost always it's something that we're not even talking about, or, right? It could be a credit event. It doesn't have to, I'm not saying it's going to be a terrorist attack, but it seems to be always something comes out of nowhere and almost knocks everybody upside the head. And that's where you start to get that capitulation that we've been talking about, and that this market has been lacking for a whole year now, okay? Again, no reason to try to predict it, but that's what we're waiting on, in a sense, right? Every bear market kind of, you know, the story may change, but it always has the same theme to it. It seems to be, and we got to stick to the game plan that we've been sticking to most of the year, right? And that's the game plan. Try to take advantage of these on the long side, right? On the short side, be careful, obviously, but it's just the opposite, right? You don't want to get short in the hole here, right? You want to try to get short when you have some momentum, and be extremely tactical. Don't try to hit home runs and get greedy, because that's where you're going to get knocked upside the head, right? So we want to stick to that game plan of being extremely tactical and being patient for those setups where we have the highest probability of trying to make some money until something breaks, right? And that's my definition of something breaking. Something that's just going to knock this bear market out of whack, and things start to change because you get a spike in volatility, you get some capitulation, and you get people quitting the market, and that's ultimately what happens, right? That's, if you ask me, and again, you could call me a conspiracy theorist, with everything that's gone on, I think that's the Fed's number one goal. I really do. Like, even like inflation being an issue, I think what was going on, because of the amount of liquidity they put it in post-COVID, okay, what they created was a monster, and they had to deflate that balloon before it became a bigger problem than it already was becoming. You know what I mean? And you guys know exactly, right? From crypto to everything else we've been talking about week in, week out. Even the risk assets, equities, right? Um, the whole Tina trade, right? There's no alternative. You have to buy equities. There's nothing else to buy. Just keep buying equities and you're going to be rich. That whole philosophy, that whole mentality, there had to be a cleansing, right? So listen, I know it's inflation is the excuse out there for everything they're doing. But I think regardless, the Fed's #1 mission, and I think the reason why they probably are going to play hardball and remain on the tighter side until something breaks is because they needed to deflate a lot of this euphoria out there. All right. So that's what we're waiting on. So where are we now, right? We talked about recently how over here, right? And I think what was it, next Tuesday? So last Tuesday, the market was already in the process of coming in a little bit. Okay. What we want to try to avoid is buying any of this weakness here and playing it like it's this. Okay. Playing it like it's that spot. And the reason being is that positioning is not nearly, it's at in some places it's the opposite, but nowhere near as offsides as it was here and here, right? So what I mean in English, for those of you who have no idea what I'm talking about, hedge funds, systematic funds, specs, right? Speculators in the futures market, they're nowhere near as aggressively short as they were into these lows. Okay. So what we want to allow to happen, and it's going to take patience because you've got to deal with days like today, which look on the chart, it looks like nothing, right? Or even, when was it? Last week, where we had that nice 1 day squeeze and then we gave it back the next day, right? We can even get a little continuation from here. And that's what makes it difficult to have that, find that discipline and be patient. But we're waiting for that higher probability setup, right? Doesn't mean we're guaranteed to cash a ticket at that point, but the odds go up drastically in our favor when we get that all sides positioning. Because what it ultimately means is that you have the ammo and firepower or short covering off the squeeze alone to get a worthwhile rally going and have a decent risk reward for the entry you may be looking to take, right? Okay, because like look what we dealt with here, right? And let's say, forget about today's rally, let's say even last week's rally. If you bought ahead of last week's rally and you didn't sell that 1 day, you lost money, right? And that's what happens in here in bear markets, right? And you can see it if you look back on the chart. Happened here, happens here, right? It happens all the way down until the market gets people almost trained and used to that happening and gets all the shorts to line up both sides. Okay, so when you get to this point here, it's a matter of, and if you go back and remember our conversations, we were talking about this at each point here. Something's got to blow up here, right? For the selling to intensify and head lower. Okay. Or if it doesn't, you get where sellers ultimately can't push it any lower. They're already short. And any positive news or any news not as negative, you get some short covering stir up. That leads to more short covering, and it snowballs into a bear market rally. Right? We don't know how long they may last. Some are longer than others. Okay. The bottom line is that if you're playing off this entry, the reward, again, it's all about risk reward. The risk reward is worth playing from that point, where without positioning lined up, it's not. Okay. And again, I don't want to make this sound that easy because you guys know it's not. Right, the majority of play this game long enough. Okay, because very easily we could get a rally into the beginning of the new year, right, up to top of this range again, and it kind of throws a monkey wrench into all our plans now, right? We're waiting for things to line up coming here, and now you got a pretty decent rally back into the middle of this range, which kind of throws what you were looking for completely out of whack, right? But the difference in bull markets and bear markets, you have to try to stick to the plan as much as possible, because every time you try to deviate away from it, right, because you may see something different that one particular time, that's when you're going to lose the money. You know what I mean? You have to try. It's and the thing too, the pill to swallow, right? And you should be able to acknowledge this already, is that it's not worth deviating from the plan. It's not worth it. You know what I mean? Big picture wise, it's not worth it. Because again, if we're still in this bear market cycle, right? Even if you miss, let's say hypothetically, this rally, okay, chances are you won't even remember it in a couple of days. You understand what I'm saying? It's not like in a bull market where you like a Fed-induced bull market like we were in, where you miss an entry and that leads to new highs and gone, right? If you don't chase, you got nothing. This is a completely different animal. So that should allow you to be more selective, be more disciplined, be more patient, and wait for certain setups. All right. So that's where we're at here, right? Again, there's no, do we have to break loose? Do we have to? I have no idea. I have no idea. We could sit right here, right? And all of a sudden, the beginning of the year, or some news, you have funds aggressively shorting at this exact level, and the setup might not be that as far away as we think, right? So let me put some pictures behind what I'm talking about so you get an idea, okay? All right, and you remember, we've been looking at this, right? We look at this every day, we look at this every week, we look at this continuously, all right? So again, starting from the lows before that bear market rally got started, right? This is hedge fund, these are hedge funds, okay? They were aggressively shorting into that weakness, into the lows. Here's the zero line, by the way, okay? Here comes that bear market rally that we just been a part of, that we just looked at, okay? That bear market rally was caused by short covering from these guys and everybody else who was short, right? You see how they covered shorts and they get back to zero, okay? So now they're actually slightly net long, call them right now, slightly, no big deal, okay? Doesn't mean the market has to fall apart next week because they're a smidge net long, all right? But the risk is that if rates start to tick higher, right? Anything bearish that will get them to start adding their shorts back on, that's going to weigh on the price action, right? And what you're going to see is you're going to see them start to put shorts back on. You're going to see it start to weigh on the price action in the major indices, right? And that's going to create a bearish climate, right? A climate we don't want to be a part of on the long side. Okay, so that's the risk, right? What we're waiting for is that to happen. Let them get on the short side again, and then we can start looking for that potential entry for a bear market rally, right? And like we discussed this a couple of times the last few weeks. you don't even have to try to front run that bear market rally, right? Yeah, no one has to be a hero here, right? If you're taking that conservative approach and you're looking to just trade within this bear market rally, right? You don't need to front run it and be early, right? Look at the price action, watch the flow, wait for some bullish momentum to show up, and then when the chains start moving, the likelihood is there should be some decent momentum because you got people caught short, right? So you don't have to front run it and worried about, oh, there's still some weakness or chop or whatever the case may be. You can wait for it to, signs for it to start to develop. This is in the futures market, right? We call them the riffraff. Okay. They were aggressively short, severely aggressively short into that recent low. They covered their whole short exposure. Right? So now they're back to flat. Okay. Again, doesn't mean they have to get aggressively short by next week, but that's what we would like to see, right? Or at least some of this positioning end up where we want it. Right now, none of it's there. Okay. And that's the risk. As a matter of fact, and if you remember, this is what I said yesterday, if you were around yesterday, even though like my gut was screaming that holidays chop, right? We spoke about that. The likelihood is you get chop while everybody's waiting for the damn Santa rally, everybody and their mother talking about it. You had that JPM collar, remember we were talking about, that likely had some support in the market, right? I deep down inside, I was getting flashbacks of late 2018, where during the holidays, the market just fell apart because it could catch people not short. You understand? Everybody covered their shorts back in late 2018, right into the holidays, thinking the Santa rally was coming, and the market bit them in the ass. So I was kind of getting flashbacks. Obviously, we didn't see it play out like that this time around, but that was my concern, is that if the market wants to catch them now, right, without their short exposure, it can do it. All right, so that's the risk. That's the risk. Here are CTAs. Instead of the chart on the CTAs, because everybody's on vacation, here's the numbers behind it, so you get an idea, right? And these are not magic indicators. These are just positioning in the markets. That's right. Here is the CTA. This is at a Goldman, right out off a Goldman note. They covered their shorts. They basically got to neutral, flat, okay? And they've started now to add their shorts back on, CTAs, okay? So here, over the past week, they've sold 24 billion, 41 billion over the last month in total. That includes the covering they just recently did. Where's the S&P 500? Is it on here? Convexity, downside. Basically, here's the bottom line here. They have 16 billion of additional global equities to sell over the next week in a flat tape. Okay, so if the market does nothing and it's flat, CTAs are going to add short exposure. Okay, both upside and downside over a 1 month horizon, plus 90 billion over. Oh, that's a month. That's a month anyway. Okay, so what we want to see ultimately is we're going to get to a point where you're going to see here that in a flat tape, they're going to be buyers because they're already short. You understand? So a flat tape and up tape, even sometimes if they more weakness if they get that short, they're going to look to cover. They're not looking to add, right? So that's where we want to get to, for ultimately to this be a bullish signal. All right, right now, you would be buying into their selling in a sense. This is what it looks like. This is the global one. I wanted the domestic one. I botched that up, but it doesn't matter. Same thing. Oh, here it is. It's right here anyway. See that top line here? Okay. So top line here, flat market, sellers, up 2 standard deviation, sellers, down 2 sellers, up big, they flip to buy. Oh, this is 1 month anyway. That's 1 month. Okay. It doesn't pay now to look at 1 month because that can change. That can change because they're not at any extreme. All right. And look, this is last week. Right. So again, you're buying into that selling where, again, we're in a bull market. You might not give 2 shits. Who cares? Right. In a bear market, you need all the help you can get. Okay. So that's, yeah, Amar, again, that's a great question, but these are the type of questions that I get asked all the time. And I always I get excited like I just did and respond, yeah, I don't have the physical concrete evidence to back that up. You know what I mean? I just, maybe there's a way to find the evidence. One, I'm too lazy and you're asking the wrong guy if you know who I am. Okay. But you ask anybody who's been through bear markets and follows this stuff, and they will tell you the majority of these bear market rallies are all squeezes. You know what I mean? Because think about it. Yeah, exactly. When you get into bear markets, sentiment's pretty dire, right? Buyers are not easy to come by, especially when you're getting into consecutive days of weakness and shit like that, right? You see institutions are raising cash. The AAII sentiment is, I think, the longest stretch it's ever been under bullish of its career, So point being, you lack buyers, right? Liquidity is low, volume gets low, and this is what drives markets. When you're in a healthier market, it doesn't make as big of a difference. It still has an impact, but not as much. Now if you're getting hedge funds aggressively shorting, CTAs aggressively shorting, right? Vol targeted funds starting to short because the VIX is moving higher. That's going to have an impact in this climate. So yes, if not a big portion of this bear market of these rallies are from that, I would say the start of it, the first half of it, I can say with a lot of confidence is caused from that. But that's a great question. That's a great question. And, that's why, again, in a bull market, and I'll be the first to tell you, you don't need to really pay attention to this stuff nearly as much. Okay. You still want to pay attention to it because it gives you an edge knowing where the money is, right? But only at extremes, really. That's the only time you really need to pay attention to it. In a bear market, because like Praveen and some of the others are saying, because of, that low liquidity and a lot of, retail being whacked out of the game already and all that, I think there's nothing more important. There's nothing more important. And that's why I'm saying, it's so important, that playbook that I keep referring to, that game plan, goes back to that's where we want to feed off of, no matter what. Even if we're sizing down, playing small, you know what I mean? You're playing equity, you're playing options, whatever it may be. Off of this is where you're going to have the greater odds of finding success. Okay, and that's why we want to stick to it while we're in this mess of a market. Yes. Exactly, McBob. Exactly. All right. So you guys get the point, right? Again, this is not new. We've been talking about it, especially recently. That's what we're waiting for to set up. A lot of us thought, me included, based off the weakness we saw over the past 2 weeks, that these guys would start adding shorts back on already, right? That's what I thought. But somebody brought up a great point. I think it was, oh my God, this week is over already. Earlier this week, somebody said the end of the year, right? So they got to paint the books at the end of the year. Makes sense, doesn't it? That's the whole thesis behind the Santa rally, right? They want to show they own some stuff, right? They want to try to make some late money, paint the tape. So come early next year, let's see, right? Next week, let's see if they start to slap it back on. All right, but personally, I didn't even realize the end of the year thing. I thought this weakness here, we would have seen them, at least start to add shorts back on. They haven't even started. They haven't even started yet. All right, so we'll see how it plays out. So that's the biggest takeaway, is that these outside of CTAs, this process hasn't even started yet. Window dressing. My mind is mush after 4 o'clock. That's the term I was trying to think of, and I couldn't think of it. All right. Here are a couple things, other things we've been looking at. These are credit default swaps, right? And spreads. Again, just in bear markets, right? When something breaks, you're going to see this thing explode. In bear markets, this is a mirror image, just the inverse of it, okay, of the S&P 500. You will not find any higher correlated thing out there right now. All right. But the main thing right now we're watching is this is where the Fed at Jackson Hole said no more rally in risk assets. Right? Put the hammer down. Okay. Credit spreads got down to here. Credit default swaps. Okay. Here, if you remember, we were talking about this. We have a little bit more room to get to where they were the last time, but we're damn pretty close. Okay. Meaning that the Fed would do everything in their power to lean on any rally. Right? They do not want risk assets to rally any further. And lo and behold, marked a short-term top at the least. And we really haven't seen any reaction here yet, major reaction. All right, and that's the next thing we're looking for here. Meaning, if we do get further weakness, what does this do? All right? Because if this does this, right, if this starts to do this again, you're going to get new lows. At the least, you're going to get new lows. All right. So this, and for those of you who are looking for something like when something breaks or even before it breaks, what are the signs something may break? You're going to see it here. No, McBob? Right? You're probably going to see it here before anywhere else. You're going to see spreads start to blow out if something's on the verge of breaking here. Fed hopes slow bleed on equity. Well, I couldn't say it better myself. What McBob just stated, okay, is basically the Fed wants more of this. No, McBob? Exactly to a T. Exactly how this has been going is the Fed's goal. Orderly, right? Nice little downtrend. Every time things get a little too dicey, you get a little relief, right? Dicey, relief. And they'll take this for another year easily. Powell will sign a piece of paper right now for it. Okay? Again, based off experience, the problem is that's highly unlikely. Okay? What usually happens is something goes pop, whether it be here in this country, in China, in Europe, okay? Whatever it may be, it's contagious, right? It spreads, and you see these things blow out, and the Fed's got to come in and do something. Yeah, exactly. They almost even here, they definitely, you said it perfect. They want to see it stay in a range. They don't want to see, 2008, for example, if you go back and look at the CDX, it looked like a space rocket, But this is where you're going to see early signs of anything breaking. When and if that happens, And that's why we look at it on top of it, just weighing on the price action. All right. Yeah, exactly. Once it gets out of hand, it's hard to stop. And this is the kicker, guys, right? And I think Ani said it best with this. If you're playing according to the game plan, right? Staying small, trying to be patient, right? Tactical, don't get greedy, it's not worth it, don't get buried. If you're sticking to that plan, there's no reason to pay too much attention to any of the big picture stuff as far as when and if something breaks, or what I'm showing you right now. Okay. And this is usually what happens at the end. And I spoke about this yesterday with Katie, who, Katie wasn't even aware of this. And now I'm sure is going to keep an eye on it, right? This is the fund flow we've been talking about. Okay. All the money came in from 2021 into early part of this year. Okay, a bucket of money came into equities, fund flows, right? The final chapter of a bear market, that's the last chapter. Okay, that's almost always, right? I can only vouch for a few bear markets that I've been a part of. That's been the case. And if you go back and look through history, it's been the case. That's capitulation. When you hear the word capitulation, that's what it means. You cannot say that there's been capitulation because your neighbor is depressed about the stock market. That's not the definition of capitulation. Okay, capitulation is when everybody has sold and there are no more sellers left, right? That's why they mark bottoms or close to bottoms. And you cannot make that argument. I'm sorry, not even close, when you have equity fund flows at right off highs. Okay? And, I think this even does, this is even a better view of it. Look what fueled the bull market coming out of 08 to start 2009. Nobody wanted it. Nobody believed in the bull market from 2009 on, guys. Nobody. Every little pullback from 2009, 2010, 2011, everybody thought the next 2008 style Armageddon was coming. That's how scarred we all were. Every single one of us were pooping our bloomers any little bit of weakness, thinking that 2008 was coming back to wipe us out. Okay? And look how long that fear lasted, right? And what's funny? Like you're hearing about the VIX now. When things don't work, you always hear it's broken. That's when I was used to bring this up, and it was the opposite of what we're saying now. What I was saying is the bull market is not over. We may have corrections, we may have rough pullbacks and flash crashes, but the bull market is not over until the final chapter. Okay? And that was the final chapter. Everybody in the pool. Some of you remember those conversations. Remember? Everybody in the pool? We used to say it all the time to remind ourselves. You buy the dip, you buy the corrections until everybody gets in the pool. All right, so that's just the complete opposite. You remember that, right? Come on, we used to crack up to that constantly. Every webinar was about it. Everyone's got to get in the pool before it's over. And that's the difference between corrections and bear markets. Right? For example, you get a correction in late 2018. I mean, that was a pretty legitimate correction. It was harsh, but you get that V-shaped recovery to new highs, and the bull market lives on. You understand? They're corrections. That's a correction. It usually lasts 2 to 4 months tops, and you get to new highs. Okay. And a lot of the leadership continues to be the leadership. Bear markets, which last obviously a lot longer than 3 months, okay, and usually brings in new leadership when a new bull market starts, is a bear market because of this. And again, Praveen reminded me so well, I forgot if it was him or not, but Bova Hartnett, the analyst from Bova, confirmed for us that there's never been a V-shaped recovery without fund flow capitulation. So in simple English, you don't get the start of a new bull market without that capitulation. Oh, and the $2 thing. And Hartnett also mentioned if you say out of $100 of fund flows that came in here, right? Whatever it was, 1.5 trillion, whatever the number is, for every $100, only $2 have come out. I think it's less than that, Praveen. Now, honestly, is that recently? Because I think it went even higher, the fund flows after that. But anyway, to get an idea, so that was a while ago. To get an idea, this is just starting, if that. We're at 102, right. We're at 102. All right. But listen, it can happen. It can happen fast. It can happen fast. I'm telling you, it can happen fast. Just like it happened pretty fast. And you're talking about record amount of inflow in 2021. Okay? It happened fast. So it can happen the same way. Somebody was asking, does it have to get to zero? It doesn't necessarily have to get to zero. I think what was it? 60, more than half has got to come out. I think it is. I think that's the number. Don't hold me to it. But here's what you usually see happen. Okay. Okay. And the bull market doesn't have to start like you're saying. That's what you're asking. Does it have to get to zero? The bull market could already be in progress, but this will continue. Money will continue to come out, is the point I'm trying to make. Because you got to understand, players are so scarred. Anybody who traded through 2008 knows exactly what I'm talking about, right? We had those battle scar wounds it felt like forever coming out of 2008. Like I said, every little pullback, we thought Armageddon was on our hands. So you had fund flow selling, even after the 2009 lows, and then you had net outflows all the way, honestly, to here. It's not shown here, but you had outflows for 5 straight years. No money coming into the market. Yeah, I mean, for a long time. And then every real correction, right? Every correction after that, scared the daylights out of you. It's right that the bull market's over. Typical, wow, is it 7 to 11? That for real, that low? What, bear markets? Holy cow. Wow. Damn. Yeah, and I guess it depends what the earnings number is, right? Jesus Christ. Anyway, again, Ani had a great point. We don't want to become too fixated on it, right? We made the point. We don't want to talk about, is it the bottom? Is it the bottom? Because it's a waste of time. When the bottom comes, no one's going to want to ask that anyway, right? Our job is to stay involved, stay entertained. McBob used a line the other day. He made a nice little hit, day trading some ES calls or whatever it was. And that was his exact answer. I said, nice job. I'm just looking to stay involved here. You understand? Stay involved. You make some money, you're great, and you will be rewarded if you do. You will be rewarded if you do. But easier said than done. Trust me. There's going to be a lot of people so frustrated that leave this game. A lot of people. All right, but that's what we're waiting on here. Right? That's what we're waiting on. And if you do what you need to do, and listen, some people can't financially, right? That's why it doesn't apply. If you rely on this game for a certain amount of money, bear markets, especially early on, can destroy you. They can destroy you. Don't listen to these guys on Twitter. You can trade professionally through a bear market, pay your bills. You'll have ulcers. It's not easy, man. It's tough. But if you can somehow hang around this game, when the dust clears, when the smoke clears, I mean, just look at what happened coming out of 2008. You're talking about a generational opportunity when it comes. So you're rewarded if you can. I promise you will be rewarded. But the problem is how much time, nobody knows. Nobody knows. Yeah, and listen, you know what? Here's the thing, though. Okay, this is the tough part about trying to forecast it. Okay, honestly, we all have an opinion. Okay, we can all say, well, this is gonna happen, this is gonna happen, that's gonna happen. Next week, right, or early next year, there could be an exogenous event which leads to a credit event, right? And you have a blow up that is systemic and throws everything off whack. Okay, maybe you get a nice little flash crash in equities. You start to get capitulation, outflows. Like I told you guys, 9/11 came out of nowhere. Nobody saw 9/11 coming. Not any trader anyway, besides the one person buying calls in the airlines. You guys heard that story, no? Did you hear? Are you familiar with that story? All the put buying in the airlines? Oh, you got to Google it, Damien. You got to Google it. After you get off this, you have to Google it. There was put buying in the airlines, tons of put buying. Exactly. There was a lot of put buying in the airlines before 9/11. I'm telling you, craziness. So I make the remark, nobody saw it coming. Somebody saw it coming. All right, but that's what makes this market so difficult. You don't see these things. You don't see these things. You don't see them coming. But the point I'm making is it can put everything on fast forward. That's what it is. It can put everything on fast forward. If you get some sort of event, credit event, and it doesn't even have to be here. China, they got tons of headaches. The real estate market, you're talking about Great Depression type cycle they've been through. Okay. Something defaults, can't pay back dollars they owe trillions. You were talking about a big problem. You know what I mean? That can spread some contagion. Europe, anywhere. There's enough balls in the air for something to break. All right. So that's the problem with trying to predict this. It can look all great. You have your scenarios lined up, and something like that happens, it throws everything out of whack. Everything out of whack. Yeah, right. COVID, right? Another pandemic. Who knows, man? Don't even try to forecast it. Please take my advice. Don't even try. Okay. And I think, Ani, when you said it, Danny, we talk about it, but just when you said it, I think that's the best thing to keep telling ourselves, right? While we know what to look for, okay, when we should even start thinking about a bottom, we know what the ingredients are, but in the meantime, right, just trade. Know your risk and trade. Forget about how much money you're going to make. Know what the hell you have at risk at all times and just trade. Look to educate yourself throughout this process. Right? That's it. Right? Try to have some fun. Try to educate yourself in the process. And again, just you're thinking of the gold at the end of the rainbow when it comes, whenever that may be. But the predictions are impossible. They're impossible. Yeah, just listen, right? If we could do exactly what we're telling ourselves to do, right? If we could come as close to that as possible, we'll be in good shape. Okay, as long as you're not sizing up, getting crazy, right? Letting losers run when you should be getting out of them, or whatever. You guys know, there's no reason for any of that stuff right now. It's just not worth it. It's not worth it. It's not worth it. That's what we're looking for, to play off these things. Wherever they may be, we play off them. I'm sure we're going to lose some money here and there, but hopefully we come out net winners or close to it, and we'll call it a day. All right, we want to talk about any names here quickly. Here is before we talk about names, before you guys start rattling off names, here is the issue going on right now in names. If you remember, as long as you stayed away from, especially like the big NASDAQ mega caps and growth, you've been able to make money. There's been nice moves in biotech. These Chinese stocks have been moving all over the place. I don't know if you guys saw this piece of garbage today. Had real nice move intraday. Even over the past few days, it's been catching action. IQ, right? So there has been a good amount of stuff going up. The problem I see now, okay, is that, and some of them have been selling off, so that's good, but a lot of stuff went up a little too much, too fast, right? So now you have an issue where if they're not going to rotate into NASDAQ and the growth stuff, right? That's what they usually would do. They rotate somewhere else if things got too hot. You had a problem with just a lot of these names ran too much too quick, right? So this has got to happen, okay? McBob pointed out a couple names. I thought they haven't even started to breathe these things. Look, Deer, well, you got a little sideways there, but no pullback. All right, you see Caterpillar? Yeah, the Dow components are unconscious. Look at this. Okay, now don't get me wrong, okay? This is where the money's been, okay? This is what you wanted to own, not Tesla, right? Not Amazon, not Google. This is where all the momentum is at. But we don't want to be stupid about it, right? You don't want to start chasing these things up here in a bear market, because money starts coming out of this, you're going to lose everything. Energy names have been taking a breather. Yep. So there is some stuff that started to breathe, which is good. But I'm saying that's the one pickle we may have here. Here's an example too. This is I think this is industrial. This one caught real nice action, EMR, and it's just like hanging out up here. You see this? Looks good though. So this is the problem I'm facing. I don't know what you guys think, but see, you almost would want it to come in and you buy weakness. Hanging up here bothers me a little bit. FIS, I like the spot on that. Ooh, hold on. This one caught some nice action again. Definitely worth a look, right? See, so you're not chasing there at the least. No, they closed. If you remember, FIS caught 2 rounds of action yesterday, April and March. Okay. The April calls, they rolled the position. So they closed another April line to go into those Aprils. That's what happened there, Praveen. You know what I mean? The March, and then the March sweep was the better looking of the sweeps. There was no roll there that I see. So that's what happened there. What other names? Oh, here. these aren't exciting stocks, but this one caught a little more action. Looks good. I don't know, for fast money, I don't know if this is kind of the thing you want to see here, kind of name you would want. You might want for the fast money if you're looking for quick trades, especially if you could play the equity. These are the type of things you may want a quick trade right here, right? I played this little piece of garbage too, but again, I played the equity. Fetch. Look at this, look at this garbage. No. I'm not in. I still have yet to hold anything overnight yet. I've been tempted a lot more recently, but I've yet to hold anything overnight. Even equity, yep. But I've been tempted on a couple of slower names, but I gotta feel like it's worth it. That's what I gotta feel like it's worth it. What's another name? Oh, a lot of the growth, a lot of the beaten up names have been seeing a little more flow now. That's because the industrials and stuff got overheated. I just can't buy them. I can't. Can you buy this? Can you buy this? Yeah, listen, this is the longest stretch, Sahil, that I've ever done this, been as disciplined. My discipline's ready to go out the window. I'm not going to lie to you. Not that I'm ready to become a complete degenerate, but I'm ready to play a little bit more. You know what I mean? I don't need to be as strict as I am right now. I didn't have any intentions of being this strict. I didn't think this is the longest I've gone without any interest in individual a name, in playing a name. So I appreciate your compliment, but it's like it's annoying me too. I want to play a little bit because listen, that's how you're going to stay involved. You have to enjoy the process. You know what I mean? You have to. Even if you're treating it like a DraftKings account right now, you have to have some action out there, right? Yeah, so day trading, that's my action. That's what keeps me involved. And I know, I'm not trying to make money. If I make money, it's nice, but that's not my main goal, right? My main goal is not to take hickeys. So until that mentality changes, I just haven't had the interest in holding overnight. Yeah, so you got June bull risk reversals that somebody's opening up in this thing. Now, this is the exact opposite of what we want to look for. All kidding aside, the exact opposite. Because what's going to happen is every time rates tick higher, like if the Fed's going to stay tight here into early next year, anytime you get that algo selling of higher rates, this thing's going lower every time. So you have to sit through that before you catch news or a bear market rally in this thing. Maybe a lot of the damage is done and it's, maybe you just get hockey stick here. Maybe you just go sideways and then you catch news and you cash your ticket. But I don't even. Is this like somebody was telling me this is not? It's a real company. Like I don't know. I don't know, guys. This is tough. This is tough. Yeah, well, this was Bitcoin. Remember they opened up that Bitcoin exchange, caught a ton of action in that thing. So it always seems to catch news and then goes bananas, but it's a different market cycle right now, When the Fed's printing money, it's easy to get excited. When they tighten the spigots, that Ani, in this type of market, that's not a bad thing to have. I'm so used to doing a lot different. You understand? Like, I love buying weakness, but in a bear market, you got to be careful. You don't want to do that, But I'm so trained to buy weakness. But what you're saying is buy strength or pullbacks is probably even better, right? Like that would probably be even better. Yep. See, you know what the problem I have, Ani, with that? This. Okay. Like, you see this? Okay. For whatever reason, this is tough for me to pull the trigger, even though it's a constructive looking chart. Right? Like, I really like this thing. I really do. I love the flow in it. The company, you couldn't draw up. This is exactly what I mean of what the real money's buying out there right now. But without the pullback, you understand? I guess you got to look at it differently. You got to look at it as a trade, right? What do? You say you stop yourself out if it breaks down. That's how you look at it. This looks like a topping pattern, Priscilla. But maybe I'm saying I have trouble buying this type of stuff. I really do. I have trouble. What I like to buy, you guys know what I like to buy. I like to buy off pullbacks. I like to buy off weakness. Here, because I got a buddy of mine, but again, this is not in bear markets and bull markets. He's one of the better traders I know. And what he does is he'll buy some there, and if it comes out of there, he'll add. But again, that's in a different market. This is not the market to. My favorite pattern is kind of like range bound dead heartbeat that catches sweeper activity. That's my favorite pattern. I'm trying to find one to show you guys, but kind of like sideways low end of the range, and then I'm playing for that upside. So the sweeper activity comes here. That's my edge. That's going to bounce from there, and I look for that upside. Yeah. Again, Ani, it's not. It's what you're comfortable with, right? That's all it is. It's what you're comfortable with. If Priscilla and I aren't comfortable buying this sort of setup, then we shouldn't do it, right? If you are, that means you know how to manage this. Maybe you say to yourself, here's my risk, right? If it breaks this and closes below it, I'm done. That's my loss. But as long as it stays above here, I'm looking to make money, So I'm saying it's just preference. That's all it is. Preference. There's no right or wrong way. You know what I mean? There's no right or wrong way at all. And it actually makes sense that this is stopping here. This is tough. What else? Give me some other names. Maybe you guys see something else. I know, Ani, you've been killing it with trading these biotechs. They've been unbelievable. I traded a couple of them, but nowhere near what some of you guys have been doing. Who made money with this? I know a couple of people in the room made money with this guy. This had a big short position too, this VKTX. What other mine is new. I like that. New developing Niner ramp up. That's my style too, Ani. TGTX, that caught news too, right? Yeah, that caught news too. They're catching news all over the place. Jesus. Look at Ani. He just rattled off 5 of them. MDG. Oh, I saw this one the other day. Ooh, my God. Wow. All these spec ones too, huh? In Cala, I saw that was today, right? Or yesterday? Oh my God. All you need is one of these and you're good for 6 months. You catch it right. What about China? Any China related stuff? Anybody play around in the China stuff? Make some money? There's been some nice moves in those things. Yeah, Baba, they're buying dips in this Baba. You know? See, this looks interesting. Like, look at that, right? You got this, there's your upside niner, and then you got nice consolidation here. You know, no selling, they're buying every dip in this thing. Yeah, TAL, I've been watching it here on the pullback. I actually know which one I played today, but it didn't move when I bought it. This go to. Look at that move. So you couldn't ask for worse news than what they got, right? China, supposedly China is going to be tough on them. That was the news, right? To spook people out. But if you remember our conversation over the past few weeks now, this is what you've been waiting for if you're interested in these things. This is what you wanted, right? You don't want to chase that rip that was getting out of control. You got a nice wash. But, you know, for a trade, I don't, you know, for a swing trade short term, I don't know if I would do it. The allure here, the draw here is lotto leaps. That's what I think is the allure. You go out with time, you put in what you're willing to lose, and you try to get greedy. You understand? Don't sell the first pop. Maybe, you know, a year from now, you're going to be like, oh my God, this thing is $40 again. I would just, you know, treat it like a lotto, you know, just treat it like a lotto. So here, I've seen this thing go, okay, when this gets hot, I've seen it go, my jaw dropped. I've seen this thing come back from the dead a few times. This and this, the exacta, EDU is the other one. Yeah. So, you know, again, they're risky, but I think they're, you know, kind of like the little biotechs. They're made for options. You know what I mean? You can manage your risk, and if you get lucky, you make a lot of money. I think that's what they're made for at this point. But they're definitely risky. Yeah, Pfizer's a good stock. Pfizer's been neglected for so long. Pfizer's probably going higher. Yeah, I saw J&J today. That looks good. All these safe stocks. I mean, how about Merck? It still hasn't pulled back, has it? Look at this. They're China online education. Yeah. They were printing money. They were printing their own money. That's how great of a business they had over there. And then the Chinese government got involved. That's why they got killed. You know, the Chinese government stuck their hand in the cookie jar. Oh, Billy, I looked at Billy. Looks good. I know. Caught some flow today again. Had some life. These Chinese stocks, they're going to be interesting the early part of next year. Definitely something definitely. You know, especially for how we want to attack this game right now. You know, for those trading opportunities, because very easily we can see these stocks diverge from whatever the U.S. market. may have to do. You understand? You don't have to rely on the S&P 500 going higher to make money in these things. And that's kind of what you're looking for. That's kind of what you're looking for. So these things could have a really good year next year. And, we could just have another year in the bear market. That could easily happen. And you talk about capitulation. You've had capitulation in China officially. Yeah, they can run fast. They're heavily shorted on you too. Like this thing. You know what I mean? They're shorted, forget it. Out the eyeballs, this thing, IQ. Look how hammered. Have you looked at these charts, Ani? Do you remember this IQ? We used to love this stock. Look at what they did to it. There's barely anything left in these things. They've been obliterated. This is kind of like the growth stocks that we're witnessing get hit over the head, going down for another year. That's basically what it is, right? So you might have some money on the sidelines, start to look for opportunities there. That would make sense, especially if you get dollar weakness and stuff like that. Like that's Hartnett's trade for next year. You get some dollar weakness and these outperform. And don't kill me. I know believe me, I'm no gold bug. I don't like gold stocks. In a bull market, you wouldn't catch me dead trying to buy these things. But I have an interest in the gold miners. I really do. I really do. I don't want to be too early, but I really have an interest in the gold miners. Maybe I'm nuts. There's some flow there with time. And they're just in this part of the cycle, they're due. They're so due. Let me see. I'm going to check it with you guys right now. Let's see. Oh, wait a second. GDX wasn't even around then. Let's just look at gold. I don't think GDX was around 2000. Was GLD around? I think so. If not, I'll look at the gold futures. Nope. That's not what I wanted. Let's see. Just going off that blueprint. I'm just curious. What happened? Oh, there we go. Oh, GLD wasn't around yet. Hold on. All right. So this is gold post 2000 blow up. Look at that. Do you see this? Okay. Look at this. Here's the 2000 NASDAQ top. Oh, no, actually March. So right here, the 2000 NASDAQ top, right? The market's topped out. You have the markets, we're going into a downtrend bear market. Here's 2002. So here's where the rally started. And look at that move. And almost the same thing. Like nobody had an interest in gold. Think about it. In the late 90s, 2000, right? Why would you buy gold when you could buy an internet stock that will triple in a week? You know what I mean? So gold, everybody lost interest in it. And then look at this move it rattled off with nobody in it. This probably went on. Well, yeah, I know it went on. Wait, it went on. Oh my God. I'm going to get us all excited. We're all going to load up on gold tomorrow morning. Look at this. Do you see this? Okay. So this is what happened to gold if you bought it a year into the bear market of equities. Cuban calling gold buyers idiots. Really? Oh God, are you serious? Don't gas me up. I'm gonna send you the bill if I lose money. You keep gassing me up like that. Especially that guy. Talk about a horseshoe up your ass. What a lucky bastard that guy is. You talk about right place at the right time. He was broadcasting Indiana Hoosier games out of his dorm room on the internet. You're 100% right, Ani. Like, listen, I'm not hating. I just, his attitude bothers me more than anything else. You know what I mean? But you know, he's just the total opposite, right? Of like a drunken Miller or anything like humble. He's just an arrogant prick. Anyway, but that's a nice contrarian sign there on it. But yeah, look, this is the gold move. This is the gold move. So we definitely have things to look for next year, guys. You know, as bad as the market may be, and the noise is probably going to get even worse, right? We spoke about that. The environment's going to try to neg you out as much as possible. You got to keep your blinkers on, your blinders on, like horse racing, and keep your eyeballs on the stuff that matters. Cuban's a terrible trainer, mixture. Yeah, because he got lucky. That's all. He's got, you know, he had nothing. It wasn't any talent that made him. Yes, Steven, remember that? What year was that? You know what's funny? That's all my boys. They're the best indicator in the world. They got out of the equity business and they opened up gold shops during that run. What year was that? That was 2007? No, 2000. What year was that, Steven? That wasn't here, was it? Oh, yeah. 2010. I think it was even earlier than that. It might have been earlier than that. Well, let me look here. I'll tell you right now. It was right here. Yep, you're right. You're right. 2012. That's some. Holy shit, that rally. Wait, that's the same rally, Steve? Oh, that's what you're trying to tell me. That was the same rally? Oh my God. I didn't realize that. Oh, I mean, if that wasn't a top indicator, right? Exactly. That was the biggest top indicator on the face of the earth. I swear to God, everybody I knew that I grew up as a kid in Brooklyn, that's everybody had one of those gold shops. Yes. Oh God. Oh man. No, but seriously, the moral of the story is we got a lot of things to look at next year. Somebody was talking about SPB. I day traded that yesterday, SPB. Spectrum Brands. It caught a nice April sweep. There was a little April put activity that came in after the stock ran intraday, but a lot smaller than the call buying. But had a nice move. Where's yesterday? I made a little money with it. $1 on it I made. Where is it? Is this it? Yeah. This is it. Oh, it was up today again? It was up today again. Oxy, the flow, you know what the problem with Oxy is, Priscilla? That there's been so much flow in it over the past almost year and a half now, you know? So the majority of the flow we see, especially like after Buffett and all that, there's a lot of just positions being moved around. It's not new buying. I should say you can't even tell if it's new buying or just positions being moved around. So I'll give you an example. when Oxy started catching action, okay, back here, there was, if you saw a sweep, that was there was no other action in it. Like, you knew all the buying that came in, you saw it in with your own eyes, but literally you could ask anybody who's been following the flow. Oxy from this point hasn't stopped catching call buying. It's been insane. It's been insane. And that's, for a lot of these energy names, Devon, tons of buying in this thing. This one, Hess, BP, all these names. So that's the problem with the energy names. They just been, there's so many buyers in them already. So many buyers. WK. Oh, all right. We'll see. They probably roll them, I would think. They probably roll them. They were Jans, huh? My daughter's going to buy a dog, a golden doodle or noodle. Golden noodle. Oh, I know what that is. Yeah. I know what that is. Yeah, that's what they do now. They mix the big dog with the little poodles. They come out so cute. What do they call it? A golden doodle? That's hysterical. They're the best, though. Dogs are the best. That's why. They're better than human beings, the dogs. You got to get a good dog too, honey. You don't have a dog? You got to get a dog. Yeah, get a dog. Name it after a biotech that you made some money on. You take a little bit of the profits, buy a dog. Yeah, they're nice. They're good company. You guys know I got 9 of them. I spend all my time with them. They're the best. I talk to them. They don't give me a tough time. They're willing to do anything I want. Let's go out, guys. Let's get some fresh air. Let's go for a walk. Let's plop on the couch, watch some baseball. All right? Let's go eat. They'll do anything. You know what I mean? They never give me lip or anything. They're amazing. Oh, honestly, I would have a circus here, but I would have like 20 dogs. If honestly, I wouldn't mind it. I love them. Yeah, so there's WK we gotta watch for action. I'm trying to think of other names. Been so sporadic. There's been quite a few names though. Before we wrap it up, I just wanted to, because you guys, a lot of times you guys tell me stuff on these names that I didn't even know. Oh, we were talking about this in the room today. Jules is the best. She's always by my side, Jules. You got some squeeze stuff out there. What's going on with these things? Anybody, what's that? What's the Warner Brothers ticker again? The Warner Brothers, the beaten up name that caught a little spec action, WBD. What's the story with this stuff? What's going on here? Like, what is going on here? What's the problem? These things aren't running with, they don't rally with value. I mean, they're bleeding out money now. Maybe that's why. You know what? I think this the meme craze killed these things, right? That's what happened. This demolished. Like, and I know, like, I remember, like, Dan Niles loves this thing right here, but he is extremely underwater. Like, he thinks this is severely undervalued. This is scary though. Like, this is when you can't catch a bid. What is this? Oh, let's see what this is. Did it open? Oh, here it comes. Oh man. Oh man. That's what I'm saying. They must have later, Ronnie. Happy New Year. Happy New Year. They must have serious issues, huh? Well, that's what I was thinking, Damien. like any maybe activists or something. I mean, do these names, what do? They go dead? You know what you got to watch? That they don't do GE and reverse split and end up dead wood for years. You know? Lucas, George Lucas. Wow. Yeah, maybe maybe they catch a bid. But something else, if there isn't a credit event that goes on next year, this activist thing might linger, right? So we might see action in names that may catch news. Like this is one right now to keep an eye on, as you guys know, that they've been playing. FIS. And it had some news recently that they're getting urged to look to make a move. This is a nice spot too. You know what I mean? You got the dip here. These are story stocks. You know what I mean? These are story stocks. But maybe we'll see more of that next year too. What are the names? Anybody else have any other names before we wrap it up? What was in there? I think it was the EMR fresh. Oh, this one. Yeah. I think I have an idea of, there's a fund that, you have a couple of funds that bought stock recently. I don't know if it's behind the recent call activity, but one of them is Al Gore, believe it or not, his fund took a position in it. And there was somebody else. But yeah, these type of names, we might see more of that activist go private type action, because that's the only thing that's going to happen to these things. The problem is it's a double-edged sword. If you play the equity in here, you know what I mean? You could easily manage it. What you're worried about is a flash crash, or an earnings warning or some shit like that. That's the major risk to buying equity. But you can even treat options the same way. You got a decent floor here, so you try to stick it out, try to catch some news. Don't wait forever. You catch it. Yeah, you could do that too. These are just tough trade. No, Siri, they're buying. There's been disaster puts in a lot of those names. A lot of them. NVIDIA, AMD. I don't think, what it means is somebody is protecting major downside and they have an equity position. That's what it means. Can you trade off it? It's not really actionable. You know what I mean? The ones you got to worry about, well, now it's almost like we're too deep in the cycle. The ones that are the real put buyers, especially in like the mid-tier range names, are the put buyers we were seeing in like the DraftKings, the at the money or in the money put sweeps. Like that, they're going for the kill there, because that's almost like an equity short they're putting on. A lot of the way out of the money stuff is just insurance. Oh yeah, they've been doing that, Siri, in this AMC. They've been doing it all the way down. DraftKings, AMC, another growth name. Was it Peloton? Another one of those type names they were just tattooing. GameStop, they did it a few times in. Carvana, that's it. So now, these things are buried. Don't get me wrong. That's one thing. I'm telling you right now, we're going to see so many of these things float near zero. It's It's going to be amazing. You know, Carvana's almost there, right? Look at this. Like even the like remember this guy? Like these names, these things are dead. Oh my God, this thing is under $1 already. Remember skills? Skills. These things are gone, guys. They're gone. Fubo. Look at this. Bye-bye. I know. You know, that's the craziest part about it is not only did you trade them not too long ago, they were great trades. You know what I mean? Like you made money with these things. I know Roku's nuts, you know? Roku's nuts. The scary thing about Roku is it's still 50. I mean, what happens if it goes to like $5? God almighty. You're talking about getting buried, man. On equity, buried. What a beatdown. What a beatdown. What are you going to do? Easy come, easy go. It had to happen, guys. You know what I mean? It had to happen. It had to happen. You know? Once you see this, once this happens, you know you're closer to the end than the beginning. You know, once this happens, it's done. That's why, again, if you remember the conversations after that, that's why you can't even fool around here. You can't even fool around here. But I honestly, I didn't think it was going to happen this quick like this. I really didn't. What I thought was going to happen was more of this. I thought it would come here, floor, rally here, then come down. You know what I mean? The velocity on the downside here is mind-blowing. Like this one too. I never thought it was going to happen in this name. This Twilio. I don't, you know what's funny? Like you talk capitulation, I think these things are beyond capitulation. I don't think they've had capitulation. I think everyone just got buried in these things. You know what I mean? They didn't sell them. They did what Kathy did. You know, they added on the way down. And now they're just buried and holding. Amputation. Not capitulation, amputation. That's great. You know, but again, that's the blueprint to post 2000. The same exact thing. They added all the way on the way down. They never sold. Right? The old, I mean, if this wasn't a sign, right? This is exactly HODL. It became a fucking hashtag. Excuse my French. Yep. Easy come, easy go. Hold on for dear life. YOLO. That's another one. Wait. What's YOLO? YOLO. What's YOLO stand for? You only live once. Right. All in. Oh my God. What a disaster. Now, you think the market gods are going to tolerate that shit? You only live once and hold on to dear life? Diamond hands? Matt, the market gods don't go for that shit. You're asking for a beating, no? You're asking for a beating, saying those things out loud. Laser eyes. They got lasered, all right. I know, that's, you know, listen, you don't want to see, honestly, I know it's a corny line. You don't want to see anybody blow up and lose money, you know? You don't want to see it. but they're so arrogant, right? They were so arrogant about it. Like even experienced people trying to share their experience in the past going through cycles like this, and they didn't they didn't want to hear it. The arrogance, that's why I'm not going to lie to you. I said it yesterday. I find I'm enjoying myself a little bit. So arrogant. You talk to these, like, they're trading. First of all, they're all trading post 2008, so they don't even know what a down cycle looks like. Some of them are just trading post COVID, for Christ's sake, and they act like they know everything. Don't sell whatever you do. Don't get conned by Wall Street and sell your AMC. Do not do it. You know what I mean? Like it, and they bury people, are buried. But listen, the cycle of life. That's what happens. There's going to be a new bull market that starts, new leaders, new players. Retail is not going to come and be a part of it for years. And then you're going to see them come in late again for the last couple of years. Happens over and over and over again, guys. If it's not Bitcoin that goes bananas and jarred farts, 15 years from now, or whenever it is, it'll be something else, right? Tulips, internet stocks, altcoins, doesn't matter. Yeah, listen, a couple things that I learned early on. Anytime you hear somebody talk with certainty about anything related in this game, right? They talk in certainty, like, I know this, I told you this, I'm telling you. Run. Don't walk away. Run. Even if you're not going to get conned by them, you don't want to even be in the vicinity of that person, because the market gods are going to rip them an ass. This game will humble you whether you like it or not. Yeah, they just, and you learn. Believe me, that's the beauty of this game. This game will teach you what not to do. That's no matter what. It will teach you what not to do. But that's why you see, people who have been in this game a long time, they're very superstitious and extremely humble. All of that stuff, man. One thing you got to do, and you guys know now going through this, whenever you see everybody else being a part of something, doing something, just think logically, okay? Is 3/4 of the world country, they're going to be multi-trillionaires? You know what I mean? Hit it big? Is that what's going to happen? Then they're not going to allow that to happen, right? That's why they pull the rug all the time. Because then you got 23-year-old crypto maniacs hanging out with the elite because they're worth billions. You got the guy from FTX who can't even put on an outfit and comb his hair every day, right? Rubbing elbows with the most powerful people on the planet. You can't. Right. That's right. I mean, sometimes it's just logic, right? Like I went to go fill up my truck with gas, and the gas attendant is telling me how much money he's making and gonna make, giving me tips on coins. I pulled out of that gas station like, oh my God, what the fuck is gonna go on here? Right? As he's putting gas in my truck, he's giving me tips on altcoins. Yeah, at a regular gas station over here. And now forget it. He's not even there. He's miserable. Who knows what the hell he's up to? I killed his head. I should have gassed him up just to at least let him have a happy day. a while, like earlier in the year. He's like, this shit's gonna bounce, right? I said, bounce. It's game over, buddy. I was trying to tell you this when you were all hyped up. It's game over. Bounce. And now I haven't seen him since. Who knows what the hell he's doing? You know, what happened to Tesla, Praveen? Wow, Tesla, what happened? News? Oh, the chart, the chart. Yeah, this Tesla is crazy. But you know, again, this where was this was the gamma run here? I think this was it here, right? So this is what went on here. Oh, here and there, because it's not my shit. So you know what I mean? I don't want to make a habit of posting other people's stuff. But here and there, Siri. Like, oh no, this I meant to square off here. Hold on. That is just the inverse of this. But you could, if I don't, you could always ask Siri. I'll let you know. You know, when there's nothing going on. If they have nothing going on, I usually don't even post it. Listen, I mean, Tesla's going to have a bounce, I'm sure. You know what I mean? There's going to be a bounce at some point, but you guys are talking capitulation, like what? New rally to new highs type shit. I don't, you know what I mean? These things are in bad shape. So you're just looking to catch a decent bounce out of it. It's tricky, right? It's tough. A couple of you caught a bounce. You bought it yesterday, right? You had a little green yesterday, and I think you guys even sold it today, which probably the smart move, be on the safe side. But you know, once it starts doing this is the market's waiting for Tesla to crash. I just, you know, whether it happened quickly or this was going to be drawn out, I think this was in the cards for Tesla. You know, it's a growth stock. I think, you know, this thing is going to be out of favor, in my opinion, for a long, long time. Hey, look, okay, you see this? This is 2020. Okay, just a couple years back, this thing split. That's why it looks so cheap. This thing could be $60, and that would be normal in a bear market. Yeah. So, you know, it's just how fast it was holding up better than all the other ones, right? Which I think was more strange. That it was doing this while all the other growth stocks were getting killed. Yeah, look, Disney, right? You got. Let me tell you, I said it to you guys. I'm not kidding. Put in 2000, okay, the blue chip of blue chip NASDAQ names I've seen go to levels that I wouldn't have dreamed of a year prior. Okay. And once the selling starts, it opens up a can of worms. You have no idea. Okay. You have no idea what it can turn into. I don't care what the future looks like. I don't care what the fundamentals look like. When you got the Fed doing what it's doing and you go into a bear market, once these things crack, it can turn into anything. You know, people forget, like, some WorldCom, some of you guys don't even know the name. WorldCom was, how can I even explain it? Almost like a Microsoft like. It went to zero. Okay. And once the selling started, they found out that the CEO was up to shenanigans too. Right. You know, that when things start to sell off, right, that's when the windows get open to everything else. You start credit issues, right? The CDS blowout. It all snowballs into bad shit. So what the earnings may look like, what the PE may look like, what the future story may look like means zippo, means nothing in this environment. Nothing. You understand? If it survives, right? If it survives this cycle, then it may mean something. But this cycle is going to take names to their knees. You understand? Yeah, and think about it, right? That's all that it takes. You get a stock to crack, start selling, then you get some negative headlines coming out about loans they can't meet or whatever, right? Credit issues, they can't get credit, whatever it may be. It just adds more wood to the fire. Yeah, and then they start digging up all sorts of shit. And then the other problem, and this is what worried me the most. Forget all that. Bear market, they go down no matter what. What worried me the most is the crowding in these stocks. Like how many mopes piled into this thing on the way up and are still in it, right? Yeah. So now they're all coming, they all start to come out. Forget it. Guys, 2008 with the banks, that's how it all starts. Everything's beautiful when you're in the bull market. Nobody knows a thing. You have no problems. You have no liquidity issues. Once it cracks, that's it. It's like a dam. It cracks, it breaks, the water starts spewing all over, you're finished. Okay, Amazon, you see, Amazon survived the 2000 bubble, had to rearrange its whole business. It survived. The stock went to $3 and hung out there. Best case scenario, the strongest of names, they get demolished and they sit down there for a long time and do nothing. That's best case scenario when a bubble pops. The total opposite of what we were seeing on the upside, right? When this was all going on, it was unbelievable to watch, wasn't it? It was crazy. What'd you have the bear say? Oh, Tesla at $200. Get the hell out of here. They're not even profitable. Tesla at $400. Oh, it's trading at 50 times revenue. Short it. Tesla at 500, right? All the way up. They don't believe it. This is the total opposite. Yeah, Microsoft was a dead stock. Dead. All of IBM survived, dead stock. Intel survived, dead stock. Micron went through, it was trading at 2 times earnings, Micron. Micron was trading at a 2 PE for like 5 years. AMD went down to $1 and change. So that's, and they at the time, they weren't even the biggest names out there. There were names bigger than that had to go in, forced buyouts. You know what I mean? They took any offer they could get just to get the hell out of there. Yahoo was a monster. Yahoo.com was considered blue chip name, untouchable. AOL, that's it. They either get lucky, somebody buys them before they evaporate. Oh, AMD was the biggest dog. How about this? I remember AMD, I told you the story. There was a sweeper bombing $2 leaps in AMD. $2 strike calls. They were out of the money, $2 calls. And they were loading up. They bought, I think it was 250,000 contracts, leaps at the time. That's before AMD started the new bull market in the name. But that stock, you wouldn't even, nobody would even look at it. You couldn't even trade it. It was dead. You know, it used to be the opposite. It used to be Intel was the leader. AMD was like the stepchild. You know what I mean? Now it's the opposite. But that's the one thing, if you take away, okay? And that's just comes from experience by seeing it. The story, the numbers, don't listen to people buy quality. There's no definition of quality. What's quality? Buy blue chip? They talk out of their ass. What's quality? Okay? Things may look like quality right now, right? But if shit hits the fan, it's not going to look like quality a month from now. Exactly. Everything is at risk. That's what makes these bear markets so dangerous. And even more dangerous when you got players crowding into these names for a decade. You know, not 2 years, a year, over a decade, plowing in to the same mega cap names, thinking they can't lose money. You know, up until recently, they're buying Apple as a flight to safety in a bear market, right? I told you, I was watching CNBC, some young money managers on, his whole spew was how bearish he was on equities going into next year. This was like a month or two ago, okay? A whole pitch on how bearish he is because of the Fed, bear market, multiples are too high, blah, 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 blah. So he said, okay, what should we do? What are you telling your clients to do? Oh, I'm buying Apple. I'm buying quality. Have you lost your mind? You just finished telling us how bad you think the environment is, especially for tech, and you're telling people to buy Apple in the same breath? Yeah. And look, even so here, there's no guarantee. Exactly. Money market. Even bonds, right? People thought that was a safe haven, and they caught it all upside the head there too. When you get into these climates, it's a debacle. You can't look to make money. You got to look to hold on to your money. You understand? That's the only objective. And it's foolish because there are more bull markets than bear markets, a lot more. The market goes up a lot more than it goes down. So there's no reason to force it when you shouldn't be. You know what I mean? In bull markets, you can make money. I promise you, you're going to make money in bull markets. You got to try to avoid these type of climates. But, you know, listen, we're talking here, whoever's on here, you're on here, we're talking, we talk about this all year. We just finished talking about the arrogance of some of the younger traders, right? When you're cocky, you're arrogant, you don't want to hear anything, that's your attitude, you're gonna blow up, right? You're gonna get what you deserve. So that's who's getting blown up right now. That's who's getting blown up. But what I'm telling you guys is it's not worth trying to get in the middle of this. It's not worth it. You know, it's not worth it. Happy New Year, PJ. I'm going to run too. Guys, happy and healthy New Year. And the God's honest truth, no matter what, you lose money, it's only money, okay? It's only money. It hurts. I get it. Stresses you out. God forbid, your eyes may not open tomorrow. You won't even know what happened, okay? It's only money. Happy New Year. Enjoy it. Good health. You and your families. That's more important than anything else. Yeah, exactly. Exactly. All right. I'll see a bunch of you tomorrow anyway, but forever I don't see, again, happy, healthy New Year. Good luck in 2023, and I'll see you guys soon. Have a good night, everybody.